Hello, everyone, and welcome to MarketBeat Monday. The market might be closed, but there is plenty to talk about today. And it's a holiday, so today we have one person off, but we do have our Chris Markoch with us to break down what to expect in the market this week. And Chris, there's a lot to talk about today. We've got so much ground to cover. Again, like I said when I started, the market might be closed, but there's so much happening behind the scenes right now. We'll get into that in a minute. I do want to break down the format. If you're new and you're just joining us for MarketBeat Monday Live for the first time, glad you're here. Thanks for being here. Kind of what we'll do, we start out by talking about some current events, what could be coming up that could move the market this week. We want to make sure you're prepared to handle any market moves that might come this week. We'll talk about which stocks have some earnings coming up that might see some moves coming. And then we're going to hit live from the comments. Just whatever you put in the chat, we're going to go through with just a cold look at what people in the comments want to hear about. So it's a great way to get some stock ideas. It's not a polished look at analysis of some of these stocks. We're taking them cold from the chat. So it's an interesting way to look at stocks. I know a lot of you love Market Beat Monday, so thanks again for being here. All right, Chris, let's dive into some of the news today. Let's talk about the biggest market driver that we're seeing in the news right now.
Right. Well, the biggest news driver that we're seeing in the market right now is happening with the news that President Trump is threatening several European countries with additional tariffs starting February 1st. The intention there is to he wants to clear the way for the United States to have a clear path to purchase Greenland. I think what a lot of investors need to be aware of right now, as far as how to process all this news, is that most likely that headline is just noise, and that there will be further details coming out, especially this week. President Trump is supposed to be going over to Davos, Switzerland for the World Economic Forum, which is going on this week. He'll be going over there. I don't think he gets there until like Wednesday or Thursday. He will probably be talking to a lot of these European countries at that point. There will probably be talks. There will probably be different headlines coming out. It's going to be noisy this week, and a lot of the topic is about something that a lot of Americans don't care about. Some care about very much, but it's a topic that it's not going to go away. So I think investors have to kind of start thinking about where you might want to be positioning if, no matter how this Greenland situation works out. That might be something to think about. Other than that, there's nothing happening this week. We're getting some economic data this week. Some housing information, I believe, on Wednesday. The PCE for November comes out on Thursday. We get the University of Michigan survey on Friday. And of course, earnings week now ramps up too. So again, no information for investors to think about this week.
Yes, there's a lot happening this week, and I want to just talk about kind of where the market's at right now. You mentioned some definite potential drivers right now. Again, the market's closed today, but what are we seeing in that futures right now, kind of reacting to some of this news and the tensions between Europe and the U.S.?
Yeah, so it started last night. I started seeing some social media commentary before I went to bed last night that the market was dropping, and I looked at the futures market, and it was down. And it was down a little bit more this morning. And from what I've seen today, it's kind of holding steady today. Not that holding steady is very good. Everything's down a little bit. I think the NASDAQ was down the most at the end of the day. I think the real news for investors will be to see what happens in the futures market overnight, which will start here in about 3 hours. At that point, we'll see, does the dip get larger? Does it get larger heading into the pre-market tomorrow? Or are investors going to start getting enthusiastic and start maybe trying to buy this dip? This is where those high-speed algorithms and the high-speed trading platforms come into play. It'll be interesting to see whether or not they push things down more, or whether they're already thinking maybe things are down enough where it's time to start nibbling on some of these stocks.
Interesting. All right. Well, we're going to get to the chat a little bit here. Some of the themes that are coming up right now is people want to talk about energy, and this is a topic we talked about first. So we wanted to talk Constellation Energy is one of the bigger ones to talk about. We had another ask about VST. That's an interesting one to look at. So we've got CEG. I've got that pulled up here. And then really interesting question here. It might be too new to talk about. I'm interested to see, but it's talking about Greenland and the conversation with Greenland. It was a
Yeah.
new energy IPO out of Greenland. It's called PELI, Greenland Energy Company, in the process of going public, and ESP, both interesting ones. Thanks for bringing those up. I'm going to just
Okay.
see if I can even pull anything up on MarketBeat. While I've got some of that coming up, Chris, why don't you talk a little bit about what we're seeing in that energy sector, specifically with Constellation Energy?
Yeah, I think, Bridget, what you're referring to is there was news last week, and I know the news is coming out like a fire hose right now. So there was talk that the president's going to be putting pressure on the hyperscalers, that would be the companies like Microsoft and Meta and Amazon, to pay for the cost of powering these new data centers that they're building. That would take some of that financial burden away from the consumer at a time when affordability is a big issue, and communities are consumers who live in the places where these data centers are being built are noticing massive spikes in their electric bill because somebody's got to pay for all this power and it's being spread out over the grid, and that means they're paying higher energy costs. So you're also seeing that impact some individual stocks like the stock of Constellation Energy. I think we talked about it last week. It's still down this week. It's down about 12% year to date. It's down 20% in the last 3 months. So, the stock's down at about a low that we haven't seen it at since about the beginning of September last year. It's kind of done a little bit of a round trip from there, and we'll see what happens. I think this is, we said it last year. We thought it was going to be a bullish year maybe for energy stocks, and I think it might have been for some stocks, but again, overall it really wasn't. But again, if this infrastructure spending is going to be kicking in on all levels, I think you're going to start seeing a lot more spending in oil, and that means oil is going to go up. I think you're going to see electric prices go up. I think it just has to happen. I think there's just an inevitability about it.
Interesting. I was reading another commentary that was saying it's a really risky time for investors to get into oil because there's so many geopolitical issues going on that anything could happen this year, especially in the oil market. So that's another wording I heard. I'm curious your thoughts on that as I pull up another energy stock here.
Boy, I'll agree with that. I'll agree with that investor in the sense that I think oil is a risky trade. Yes. I think right now you'd have to have a pretty strong stomach to go long on a lot of these, especially if you're looking at these as a trade. But a lot of the, especially a lot of the, the big name oil companies, the Chevrons, the Exxons, they pay great dividends. And, right now they're paying you with that dividend to stay involved in the stock. You may not want to go all in on these companies, but I think having exposure to oil stocks is not going to be a bad idea, because I think the other point the investor was making was you just don't know, but you just don't know is a sentence that cuts both ways. You don't know when oil stocks are going to go down, but you also don't know when they might jump right back up.
Yeah, interesting. Okay, well, let's go to another stock to talk about here in the energy sector. Somebody just put in Bowman Consulting Group, BWMN. I'd not looked at this one when it comes to energy, so thanks for putting that one on the list. This one's down about not quite 12% in the last 3 months. You can see a stark drop in November, and now it's slowly starting to gain some more ground. Again, this is just another energy company, it looks like. I don't know if there's anything specifically too interesting in here.
Yeah, it's I don't know if I would. It's not necessarily an energy company. It's one of these consulting firms with energy and construction, and so they're responsible for a lot of the permitting and the approvals and things that are needed for that. I think that's where a lot of people are getting interested in it, because they're the company that would be they're at the tip of the process right now. A lot of these projects that are going to need funding, you're going to have to go through a company like BWMN first. I think that's the enthusiasm. Stock analysts give it about 11.2% upside, and it's up already about 11% for the year. So This is clearly one that investors bought that dip that happened way back in November, which, if I'm correct, it coincided with their last earnings report. So investors sold off after the last earnings report, had a big revenue miss, and that's probably why it started selling off. But it's looking now like investors are getting back into it. They're buying that dip, and it still hasn't been bought all the way back, and that's why. But analysts believe that we're gonna get close to that where it used to be. So could be worth jumping in on that one.
All right, interesting. Let's go to another one that we had talked about. Actually, I wanted before that talking about that Greenland stock. This is said to be an energy company just IPOing on Greenland. It's called
PELI.
PELI, Pelican Acquisition. Okay. And it does say it's a Delaware-based special purpose acquisition company.
Right.
Interesting.
Okay, so what we're going to have to, so here's what I'm going to tell investors. This has 2020, 2021 vibes for me. So what investors need to know is Peli is a SPAC. So they're a company that has intentions of bringing another company to market. Without knowing what the name of that other company is, it's really hard to talk about what the opportunity here is. So, that's the whole deal. Peli is going to be responsible for bringing another company to market. This was very common with the EV market in 2021. You saw it with some of the battery companies. So again, without knowing what company they're planning on bringing to market, it's tough for me to comment on it anymore. And I don't know what company they're planning on bringing to market.
All right, good to know. Okay, let's get on to
always risky.
That's really good advice. Know the risk in that one. There's so many names coming in here. We're going to get to some of these ones. Some we've heard before plenty of times. We'll cover DVLT coming up. We'll cover IREN, absolutely. We'll talk about a lot of the different names. MO's been mentioned a few times, so we'll get to that too. I want to go to one that we wanted to cover for sure. A couple people asked about it too. We know the Netflix earnings is coming up this week. A lot of people are watching that one closely. And we talked about Netflix last week as a potential buy opportunity with how low it is. And then it got lower. That's definitely what happens sometimes. So pulling that up, it's down to a little bit lower than where it was even last week, down 26% in the last 3 months. What are you thinking for the earnings report coming up?
Well, I think the earnings report comes actually at a good time for Netflix because they need to deliver some news that's going to change, that's going to put out something that's different news than what's been going on, which is the whole noise around the Warner Brothers deal. And the last earnings report they did, it started making some investors a little bit nervous about maybe growth is slowing a little bit among subscribers. So Netflix is a company that definitely needs to have some news coming out that's going to change the story. And the earnings report this week has a chance to do that. From what I'm seeing, analysts are expecting them to report earnings per share of about 55 cents, which would be, by my math, that's going to be over 20% higher year over year. They're supposed to report revenue of just under 12 billion, 11.97 billion. That would also be a significant bump from the year before. So again, I think Netflix just needs to have a really solid print. If they do, again, I've thought Netflix was probably a pretty good buy the dip opportunity for a while now. And I think that this is probably going to be a buying opportunity if the report comes in the way analysts are thinking it's going to.
I do have the most recent analyst revisions pulled up here right beside us, and because I think that this is kind of important to look at too. We're getting some revisions from 139 down to 110, at 105, 115. There was one about a week ago that was originally had a price target of 142 down to 115. Right. So I think looking at those revisions to see that there are some potential changes expected from analysts is an important thing to consider too for Netflix.
Right. And I actually when you were just doing that, Bridget, I was looking at something at a site called Whisper Number where they give the Whisper Number. And that's sort of where like a lot of analysts are also like saying what they think really might happen. And they're looking at earnings per share at 64 cents. So that's even talking about a bigger year over year beat from where it is. So again, possibility for a big beat there, and that would be big news after the market closes tomorrow.
Yeah, lots to watch with Netflix. I think that's a really good one to look at. All right, let's get to some of the other names. I'm just going to give you a couple of minutes to look into them. So we'll look at Datavault and IREN. These are MarketBeat Monday regulars. We talk about Datavault frequently, and this company, penny stock territory, shot up to over it was at $3 at some point recently, back down into the penny stock territory again. Is this all just volatility? What can investors look at? I know Thomas has made in the past kind of an argument for the long-term potential success of this idea behind Datavault, but we've seen so much volatility with this stock.
And I think you're going to. Whether or not investors like it, this is a stock that, and Thomas and I have talked about that before. You've got very little institutional interest in the stock. MarketBeat shows the institutional buying at less than 1% of the shares, and that just invites the fact that you're going to have a lot of short sellers that are going to come in and they're going to want to get involved, especially since it's a penny stock. Penny stocks can make big moves, and they can make investors lots of money, both going up and going down. So that's why they're targets for short sellers. The company, it's very interesting because the bullish thesis for Datavault is if they can figure out the way to make data, if they can monetize the idea of monetizing digital information, that's what they're trying to do. And it's a very specific niche. Nobody knows if they can necessarily do it. And you're really, that's where you're at with it. If you believe they can, then certainly getting in on it now with shares under $1 makes a lot of sense. But there's risk, and it's a long-term play. I've always agreed with Thomas. It's a long-term play. It's one that investors have to buy with a lot of conviction, and and stay with it. If you're going to stay with it until you know for sure that the thesis has changed in a way that makes holding the stock not good for you.
Yeah, and again, this is advice the two of you have given before, which is on a stock like this, have conviction, hold long term, but take profits as you can. At least get back that original investment, and then hold long term to see where this heads, if this idea really takes off, knowing it's still a risk, but this is something that might not actually pay off for another few years.
But when you take the profits, you've protected yourself because you've already got your initial investment out of the way, and you've banked that, and now you're just playing. Now you're really just using your play money.
Yeah, that's for sure what this one is. One of the questions was, why are people so bullish on this one? And I think Blue Dolphin, that's the ticker. Thanks for being here with us. I know that the thesis behind the idea of Datavault is monetizing information in the age of AI. And so like trying to find a way to monetize that where it's not just free information, but you're monetizing the knowledge and information to share with AI companies. So it's an interesting concept. Who knows if it will actually take off, but you're getting in early if that idea does take off. Yeah. All right, let's get to some other names on here. There's so much going on. RZLV and SPCE. Different names. I don't know if I know. I think Resolve we've done before.
I seem to remember us talking about Resolve before.
Yep. And then SPCE. If you're wondering how I choose these names, oftentimes it's at random. I just look over and see which tickers I can see. If I see multiple people have asked about the same company, I'll also do that. I know I did see SMCI, and we wanted to talk about banks because the banks all just reported. So we'll get to that sector as well. But for now, Chris, let's get over to Resolve AI. This is a company we've talked about before because it has really, really good upside. Right now, consensus price target shows it with almost 120% upside. It's trading at just $4.60 right now with that consensus price at $10, but the high side targets have it at $15. What's unique about this company?
Yeah, so the stock dipped. The stock is down pretty sharply since the middle of September, and I think a lot of that was just the whole investors lost some appetite for tech stocks, especially tech stocks that were in Resolve's category. This was a small cap stock in the tech sector, and that just got wiped out. what you've been seeing over the last month is that some of those small cap, especially small cap in tech, they've been coming back. And I think that's the story here that you're seeing with Resolve. Investors are getting excited. They're buying that dip. The company is showing that it's going to have in their last reporting period, Resolve said they plan to end this year, 2026, with at least $500 million in annual recurring revenue. Investors like to hear that. They ended 2025 with $209 million in ARR. So they're basically saying they're going to more than double their ARR over the course of this year. Investors like to hear that, and that's one of the reasons why this stock is I think getting renewed attention after that giant dip from September to about mid-December.
Perfect. Well, let's look at that SPCE, and then ONDS is another one people want to look at too.
Okay, I saw that. SPCE. This is Virgin Galactic. So again, I would love to have context on this one. I haven't paid much attention to this stock recently. This is space tourism. This is the Richard Branson company. They're doing the thing with putting people into low orbit, in sort of again as a space tourism type thing. Trying to see right now if they've branched out into other areas to try to help in the space. Are they moving over more into the space infrastructure space? I don't see that, but that would be one reason why I might get interested in the stock as just a space tourism stock. It doesn't necessarily excite me that much.
Yeah, this is one that looks like people have lost a considerable amount of money on this one, down 100% in the last 5 years. So kind of a hard one to look at getting into if this is a low to get into it. It doesn't look like it's done much of anything. So other than volatility, it's kind of...
Yeah, this is one that I think a lot of people thought that they were going to just start, they were going to have a lot more launches a lot faster than they have. And I just don't think that narrative's worked out for them. And again, I think it's challenging to buy the stock right now. It's from what I can see, from what I knew about the stock, it was space tourism. I haven't seen them change that, positioning into being a space infrastructure company. Investors, please, if you know more than I do, please let us know in the comments. But, as a space tourism company, it just doesn't excite me that much. There's a lot more going on in the space sector, a lot of other stocks that I'd be a lot more interested in.
All right, good to hear. I haven't heard anyone else saying something different. So we're going to go to ONDS. I want to go to MO because we had several people ask about that one. And then Path is another one that a couple people have asked about. So why don't you look at ONDS first? I've got somebody's saying it's cheap and that there's some other investing channels talking about it. I don't know if cheap is the right word. It's closer to... the top of its range, not quite there, are seeing a little bit of a drop from its high that it hit just last week or 2 weeks ago. Have you covered this one before, Chris?
I have not. And unfortunately, I think Thomas has, but I have not.
That's right. I remember talking about it, and I think if
this is a drone stock. This is in that drone area. So that's probably the reason why a lot of people have been talking about it, because again, the Pentagon is getting to that point where it's, the budgets that you're hearing being talked about, the largest defense budgets ever and such, that's because a lot of what's happening in the defense industry is we're having to change the technology out. So we're going from the old-fashioned technology that we used to have. We're still going to have some of that, but a lot of it's going to drone warfare and everything that comes with that. ONDS is right in that wheelhouse.
I think that this one too is actually looking. It's similar to ASTS Space Mobile. So this is about creating a private wireless networking solution
Yeah.
with drones. And so somebody else asked about ASTS Space Mobile. This is something we've talked about plenty of times on the channel. And ASTS has had quite a run up recently. I mean, this one's up 38% in the last 3 months, but 52% in just a month. So you can see this big jump for ASTS Space Mobile. Again, this concept is all about that wireless
Right.
network just for cellular consumers in space using satellites. I think that concept is so interesting. Do you think that these two stocks are similar enough to talk about together, or is ONDS more of a military play on this concept?
Right now I would say ONDS seems definitely more like a military play right now, which isn't a bad play. That may actually make it very good, because what you've been hearing a lot about in the space sector is it's going to be the defense industry that's going to be the proof of concept for a lot of these companies, because that's where the need is right now. But if they can prove the concept there, then that's going to make it more likely that they can use it for for consumer use, and then obviously for space exploration, which is the broader goal of colonizing the moon, going beyond that sort of thing.
Yeah, I think that's really good too. And then the ASTS, again, just a different concept. Somebody else pointed out, definitely different things. Absolutely. I also want to point out lots of people asking about drone stocks in the comments. I'm excited because I was working on this today. On Wednesday, I'm launching a brand new series that I think anybody who likes MarketBeat Monday will like this series. It's a regular video I'm going to post on Wednesdays about market close, and it's 10 stocks in 10 minutes. And the first 10 stocks that I'm diving into are all about drones and defense. Hot topic right now. And so I'm researching and going to have a quick report and rundown of these 10 stocks building towards the drone and defense stock that has the most momentum right now. So please come back to our channel on Wednesday and check it out and let me know what you think about that format. It's something new we're trying, and I'd love to hear your feedback. So back to our MarketBeat Monday stuff. So we've got I think we covered ASTS Space Mobile enough. Let's go to Path a little bit. This is one we haven't covered quite as much on MarketBeat Mondays. This is Path, P-A-T-H, end-to-end automation platform with
UiPath, yeah, okay.
Yep, with robotics. And that one is down considerably right now. I think this is an interesting time to look at Path. Thanks for bringing that one up.
Mm-hmm. Well, let's take a look here. So yeah, it sounds like with UiPath, the story is that they were a company that was really big with agentic AI, but when they were releasing their solutions, the market really wasn't quite ready for them. And so now it looks like that story is starting to change, and analysts are starting to get a little bit, are taking a closer look at the company. Stock's got about 11% upside from where it's at right now. So even though it's down about 12.5% for the year, I think some analysts are looking at that and saying, okay, maybe that the stock may have gotten a little bit ahead of itself late last year, but analysts are getting excited about it for this year. It's an agentic AI play.
Yeah. Another question, this one is probably coming up from video that Thomas and I did this last week, which was Sentinel-1. So we want to talk about Sentinel-1 and talk about cybersecurity stocks in general. Earlier on, we had a question about why is cybersecurity. Chris, let's see, just a second. I'll pull up one of these. Chris, are you still there?
I am still there. I don't know what happened, Bridget.
Yeah, it just kind of popped out.
I was rolling on. So I think the question with cybersecurity stocks right now is just a valuation play. You're seeing it with CrowdStrike. You're seeing it with Palo Alto. The demand in the cybersecurity sector is going to be immense over the next few years. It's one of those situations where the growth of AI is also creating the growth of bad actors who use AI to try to hack other systems. So you're going to have to have AI native defense, cybersecurity defenses. That is just bullish for all of these stocks. But again, I think right now a lot of these stocks are just balanced, are just hitting that idea of they're just overvalued.
Yeah.
And in the case, go ahead.
Have we seen any other changes in any other ones?
Yeah, I was saying like CrowdStrike is down. It's not down quite as much as like Sentinel-1's down at like a 52-week low, but you're seeing CrowdStrike's been struggling to gain traction now. For it hit that all-time high back in November, and now it's been down for the last few months. And like I said, it's the stocks have been considered expensive in a lot of ways. So
Okay, very good.
big picture, very good for cybersecurity, but
I mean, it makes sense that cybersecurity is going to continue to get a lot of demand right now.
right.
Let's get to Redwire is another one that people said, and then MO. I do want to get to MO because I think that
Sure.
it's been a little while since we've done that. So let's just go to MO first, and then we can go to Redwire after that.
Sure. So MO is Altria Group. That's the tobacco company. So story here is this is a consumer staple stock. Consumer staple stocks have not been doing well, but Altria actually has been doing pretty well. They were up 19% in the last 12 months, which that is just about on par with the broader market. The stock dipped sharply at the end of last year. I'm trying to see if that was coinciding with the earnings. I believe it was. Yeah, they came in a little light on revenue, and they were down sharply year over year on revenue, but earnings were still up year over year. This is a value story. The stock is looking oversold right now, and it's probably a good time for investors to start thinking about getting back into the stock, because here's a stock that is a dividend king. So not only does it have a strong dividend yield of about 6.8%, but it's increased that dividend for 56 consecutive years. It's grown its dividend for about 4%, which is higher than inflation over the last 3 years. If you're a value-oriented investor and you're also looking for stocks that might have a little bit of growth, Altria is a good one to look at.
Okay, very good. Let's get over to, I'm already forgetting the other name that I said.
Sure.
Let's talk about SMCI. We had a few different people ask about that one, and then get back to the financial markets in general too, because we haven't talked about that yet. But
SMCI, yeah.
SMCI, we had a couple of people ask about that. Redwire was the other one. Sorry on that.
Yeah, SMCI has been down sharply over the last 3 months overall. Now it's been picking up here in the last week. It's up about 15% in the last week, and that's bumped it higher year to date. So now it's just because of the last week, it's gone positive for the year. What is the news about Supermicro here? Let's see.
Yeah, curious what's making it have that little boost it's seen.
So Supermicro is getting a boost because Taiwan Semiconductor has said it's going to raise its capital expenditures this year by 33 to 37%. SMCI is expected to be a beneficiary of that because it's one of those degrees of separation thing. Supermicro, as well as Iron, which you had said you might want to talk about, they have heavy exposure to NVIDIA's GPUs, and NVIDIA's GPUs are manufactured by Taiwan Semi. So it's one of those, degrees of separation, but people believe so. Supermicro is getting sort of the halo effect from that.
Yeah, and I've got IREN pulled up right now. Thanks for the reminder about that one.
Sure.
IREN is continuing to climb higher. This one's up 45% almost in just the last month.
Right.
Still not back to its all-time high, but this is that infrastructure play similar to Applied Digital. We've talked about that plenty of times on the channel. Somebody in the chat said something about that too. Again, whenever we pull up one, I start to pull up that whole sector again. Let me see if there's a quick update just to look at that chart too to see what that's doing.
And I think the thing with IREN is what I've always tried to remind investors about IREN is IREN was a Bitcoin miner, and they're transitioning away from mining Bitcoin to the data center realm. But the one thing that you have to understand about iron is they're using a lot of the revenue that they're generating from Bitcoin to fund their other operations. And so there's going to always be a little bit of a parallel between what's going on with Bitcoin and what's going on with iron. So you saw Bitcoin was down a lot towards the end of the year. Iron was down towards the end of the year. Bitcoin's been up in 2026 and iron's rising there too, because again, it's just what's good for Bitcoin is good for iron. It is also being boosted, yes, by Applied Digital's results, because Applied Digital helped show investors that, again, this narrative that the AI bubble is going to crash, that there's, that the data center spending is going to wane, it looks to not be a very accurate narrative.
Yeah, I think that's a good coverage on those. We're going to get through a couple others really quick here. Let's go to Redwire next, and then we will do SoFi and Hood after that, and a couple more of the financials. So I've got Redwire's chart pulled up here. This one looks like it's up 45% in the last month, having a good comeback after quite the pullback, really all summer and fall.
Right.
This one still has some good upside, not a huge upside. I'm curious what your thoughts are on whether now is a time to get in.
So, we were just talking about a company like Virgin Galactic, and I would say again, this Redwire is a company that this is the one that starts interesting me more from a space infrastructure company. I mean, there are probably some other stocks that might even be better than this one, but this is one that you want to start looking at. The company's not profitable yet, which is a risk, but they're growing revenue nicely. And again, they're just in one of those sectors. It's a space infrastructure. The company's going to be doing mission critical hardware, software for the space flight industry, which we know is going to be big. It's one of those companies that's the right company in the right time. It still may be, it may have gotten a little bit ahead of itself last year. A lot of these space stocks did, but I think this is one that you want to have on your watch list. You want to look at it and decide maybe when do you want to take a position in it? Because again, this is an area that you're going to want to be in. Space infrastructure is going to be huge. It's going to be huge for defense, and eventually it's going to be huge for the space exploration realm of all of this too.
Yeah, very good. Well, let's talk about, nobody's asked for it, but we're going to just talk about it because I think it's an important one to talk about. Let's talk about JP Morgan, and then we're going to get into SoFi, SoFi and Hood a little bit. But what did we see with the banks? So the JP Morgan is the one we talk about. It's one of the first ones that comes out of earnings season. But what did we see as a general sector for banks last week?
Yeah, we were talking about this before we came on, Bridget. So, last week with the banks, what you saw was banks were priced for perfection, and the results from many of the big banks just weren't perfect. That doesn't mean they weren't good. JP Morgan had a great report by almost any measure, but a lot of investors thought it wasn't good enough, and the stock got whacked a little bit. There's also a little bit of churn going on because the Trump administration is targeting JP Morgan as being a bank that debanked the president when he was out of office. So there's some noise going on there, but you're seeing the stock go up about 1.5% in the last 5 days. So I think a lot of investors, they've had a chance to shake off that report and say, you know what, there was really nothing bad here, and the stock's going up very nicely. Again, JP Morgan's best in breed. It's one of the best stocks that you're going to want to own in the banking sector.
Yeah, I've got SoFi pulled up next here, and this one, taking a look at the chart, it looks like it's down a little bit over the last month, down about 4%, really kind of moving sideways for a while, not doing too much of anything.
Yeah.
Again, not a lot of strength from the analysts. There's not a lot of support for this one either. We've talked about SoFi on MarketBeat Mondays plenty of times. What's your take on whether there's going to be some growth for this one this year or not?
Right now I see the stock consolidating. It's in a very pretty obvious consolidation pattern. Looks like it's been there since about September. You're just seeing it trade within a channel. popped up a little to an all-time high there in mid-November, and it's come down a little bit, but it's still trying to get past trying to get past those highs it made at the end of September. I think it's just chopping along right now. I think they report earnings the 30th or something like that this month. So that's going to be a big news for them to see what they can do, and if that's going to be a driver for the stock higher. I like SoFi. I think it's been one of those stocks. I think it got a little ahead of itself, and I think you're seeing that in some of the analyst sentiment. But that's nothing that an earnings report couldn't change. And SoFi's had a tendency to outperform expectations when it comes to earnings. So investors may want to be taking a close look at SoFi now ahead of earnings.
Okay, very good. I've got another one pulled up, and that's Robinhood. Robinhood also down quite a bit, down about 16% in the last 3 months, not doing much of anything. There is some analyst upside on this one, and even at that consensus price target, there's some upside. There's some people who are really bullish on the stock. That's a very recent one, a new analyst upgrade from on the 9th of this month that was saying a price target of 145. We see a price target of 159, and right now the stock's only trading at 108. So it's interesting to look at Robinhood right now and whether we could see a turnaround and what might cause that turnaround too.
Yeah, I think the story with Robinhood here is, I think the stock, again, it was one of those stocks that got a little bit ahead of itself, got up to nearly $150 beginning of October. It's kind of stair-stepped down there a little bit, but it's going to be interesting right now because it looks like it's finding a support level at around 110. If it holds that support level, and it's got earnings coming up February 10th, so I think that could be a catalyst to drive it higher. That's sort of the exciting thing about earnings season, but it's also the frustrating part for investors is a lot of these stocks, you have to be a little bit careful when you start trading, especially the closer it gets to their earnings report, because that's when a lot of funny things can happen. But I expect Robinhood to deliver a solid report, and their revenue is going up really strongly year over year. Earnings are going up strongly year over year. There might be some concern that Robinhood can't continue to deliver that kind of performance, but I would have to see it. I just think Robinhood is they're capturing. They've got their core customer locked down, and they're also starting to expand into areas where you're starting to see them get maybe a different customer too coming into the app.
Speaking of apps and different customers in finance, somebody mentioned PayPal and how their PE ratio is really low right now. Well, the stock is definitely in low territories, and that's for sure. I've got the chart pulled up for this one, down 15% in the last 3 months, down 76% in the last 5 years. This one just looks like a really major downtrend story. But again, that PE ratio is pretty low for this one. What are your thoughts on getting into PayPal where it's at right now?
Well, I think I'm going to, with PayPal, I think I need to see more in terms of what they're offering from a product standpoint. Their revenue's been growing decently year over year, but it is slowing. Earnings are growing year over year, but it's slowing. It's becoming a much more mature company, and that's to be expected because there's more competition in the space. PayPal was the new kid on the block 20 years ago. It was revolutionary. Now what PayPal was offering is sort of table stakes, and everybody has it, and we have to see how they can keep up with that as time goes on. It's a more mature company. Having said that, it may be oversold right now, but is it a stock that you want to go long on? I'm not sure. Again, it might be a better stock that you would want to think of as a stock to buy and hold for a long time. Looks kind of like a tough trade to me.
I think that's a good look at that. All right, we're going to go to regular AMPX. This is one we cover almost every week on the show because a lot of people heard about it here. The battery stock for drones. It's had a lot of volatility. I'm curious to see where it's at right now. It's starting to climb back up a little bit. That's good to see. How much higher do you think this one will go? And do you think we'll get back to the highs that it was at earlier in October when it was around that $14, $15 mark? We're at 11 now when it was down to that low of below 8 earlier.
Yeah, analysts, analysts seem to believe that you're going to get up to that $14 mark. Again, remember, analyst price targets are usually, a year, 18 months out. So it may be a minute before it gets there. But, again, this is a company that, and I know Thomas has brought this up before, this company that's, again, very light on institutional ownership. Only MarketBeat shows only about 5% institutional ownership on the stock. And it's got 14% short interest. So, you're always going to have short sellers interested in knocking down the stock when it starts to peak up a little bit. What you're seeing, I think, a lot in the stock right now in the last month is some of that short selling has gone down, and that's giving retail a chance to get in there and bring the stock price up. But, again, this is a conviction stock. If you have conviction on it, buy the dips.
Yeah, I think that's the question.
Which I think they did.
Yeah, I think people did buy the dips on this one. And I do think that the question that's interesting from one of our viewers is why you think AMPX is still an under the radar stock. Why is it not becoming more mainstream? I know we talk about it a lot here on MarketBeat, but you don't see a lot of news organizations. It's not making, the financial news headlines often. Why is this one still so under the radar?
Small cap. That's really it. It's a small cap stock. Institutions don't necessarily pay that close attention to small caps. It's right now, that puts it in the category of a speculative stock. Plus, there was some concern about, the lithium ion battery sector as a whole, but I think some of that's been put to bed. But yeah, it's a small cap stock. And small caps were beaten down a lot. And again, it's a conviction stock. You have to have conviction on it until, the example I've used before with you, Bridget, and again, I'm not comparing Amprius in any way to Palantir, but we talked about Palantir on the channel a lot before the institutions really started taking notes of it. And before, Palantir chopped around a lot. It went up, it went down, it was very volatile. That's kind of just part of the game. Institutions ignored it. Once institutions buy in, that's when you're going to start seeing less volatility. However, for retail investors, that's also when you're probably going to miss out on the biggest gains. The biggest gains happen when you get in on these stocks now and you have the conviction to buy and hold them through these downturns. But you just want to keep focused on why you bought the stock, why you own Amprius. And if you still believe in that central thesis, then use every dip as a chance to buy, and remember to take your profits when you can.
Well, you mentioned a good one, a good couple to end on here. You mentioned Palantir. Somebody had asked way earlier, and I finally found the exact question. They said, do you see Palantir dropping into the low 160s this year or anytime soon? Right now we're at 170. Do you see it going to the low 160s soon?
Boy, my short answer would be maybe. I would have probably said no late last week because it was starting to surge, but I see it as it's been down about 4% in the last 5 days. What I would say is if it did go down there, it looks like there'd be a heavy level of support right around 155, 160. And that would be a dip that you'd have to be considering buying if it got to that point. I'm going to be, shameless promotion. I'm going to be having an article coming out this week on Palantir. And one of the things I've been talking about was institutional ownership in Palantir by some sources has just crossed over 50%. And that, again, just signals institutions believe Palantir is going to be one of the better stocks for this year. Is it possible? Yes, I don't like to make calls on charts, but from what I see in the chart pattern, if it doesn't have any, if there's no catalyst coming out before it reports earnings in early February, yes, it's possible it could get down there, but I see a fairly firm level of support at around 155. And that would definitely be an area where I would want to be considering buying at that point.
Yeah, there's a lot of different factors to consider with this one. Those geopolitical issues could really impact not just Palantir, but all of the market that we're talking about. Good ending stock. We usually like to wrap up around 350 here. We'll do one more. Enough people asked about Tesla, and I do see that there's something interesting in the stock story anyway. It's down almost, a little over 9% in the last month. Do we know specifically? It had started to really get back up there to new highs for the year anyway. Why are we seeing this pullback now, and where do you think it's headed in the next month or so?
Oh, I think it's Tesla's a stock that traders love to trade. It's birds fly, traders trade Tesla. I think this is just a story of when the stock got down as low as it did around, the end of November. That was a very buyable point, and investors bought that dip. And now the stock got a little overextended and it's coming back down. We always say this when it comes to Tesla, but big earnings report coming up on January 28th. So we will have one more MarketBeat Monday before Tesla's earnings report. Tesla's always a volatile stock around earnings, and I think this time around it's not going to be any different.
Very good. Well, that's going to be it for the individual stocks recovery. And I do want to end on a note just for what to expect this week. I think it's important for all investors to just be ready for a little volatility in the weeks ahead, especially tomorrow. What's a good strategy for tomorrow if we start to see that volatility come early? Do you expect changes happening throughout the day?
Again, for those investors who are so inclined, many of you, if you're sports oriented, just enjoy the national championship game tonight. Enjoy that. Don't worry about the futures market. But if you want to try and look at where the futures are doing overnight, that might be a signal for what's going to happen, tomorrow morning. Certainly what I would caution investors about is don't overreact to anything you see happening in the pre-market, because again, a lot of this is going to be high-speed trading kicking in. What you're going to kind of want to watch is what happens maybe an hour or so into the trading session to see if if there is selling pressure. Does that selling pressure have momentum? Or do you start seeing that selling pressure reverse at the open? Either way, depending on the types of stocks you're looking at, if they're not going to be impacted by this tariff situation, this could be a tremendous buying opportunity and a dip that a lot of investors have been waiting for. A lot of investors have been waiting for some of these stocks like a Palantir or like an NVIDIA to start dropping a little bit to just create a more attractive price point.
I think that's a really good point and a good warning for investors. If you see a dip, it could just be a knee-jerk reaction. So something to be prepared for this week we could see coming yet in the market. Chris, thank you so much for your time. It's a lot when it's just the two of us, but we made it through a lot of different stocks today. I so appreciate everyone joining us today. And like Chris said, go enjoy the championship today. Thanks again for watching, and I hope that it is a good week in the market. We have a new video coming out every day of the week this week, so make sure to check back with our channel every day around market close for a new video. Have a great day, everyone, and as always, happy investing.